Hey, what's up everybody? I'm Waller's Wallet, and in this video, we're going to be breaking down your credit score and what each part means for you. We're also going to be talking about FICO 10 and the impact that will have on you as well. Now, if you're someone who likes credit card rewards and learning how to travel for less, hit that subscribe button and don't forget to turn that notification bell on as well so you don't miss out on future videos. Also, consider giving the video a thumbs up. It really does help the channel out. Now, when it comes to credit scores, I feel people often overvalue some categories while undervaluing others. But knowing your credit score and how it's calculated is important to making sure you're doing the best you can to get your score as high as possible. Now, a quick breakdown of your credit looks like this. 35% goes to payment history, 30% goes to utilization, 15% goes to credit history, 10% goes to credit mix, and another 10% goes to new cards or new accounts. So let's go into these just into a little bit more detail. Payment history. This is the largest chunk of your credit score, accounting for 35% of your overall credit score. And on an 850 point scale, this section's worth about 298 points, which is a lot of points, and it's easily controlled by you. And I mean, this one's pretty self-explanatory. You want to have zero missed payments to get full credit here. And there are so many tools out there to help you. You can set notifications to make payments. You can even set up automatic payments so you can make sure you're making payments without even thinking about it. And really, there are just so many ways out there to help make sure you pay your bill on time. But you know what? I also realize life gets in the way and you may forget. So setting up reminders or auto pay can really help reduce those issues or even the stress of trying to remember. Then we have utilization. And this is the second most important part of your credit score, coming in at 30%. And utilization is the piece people often talk about when you're looking to increase your credit score fast. I mean, there are tons of videos out there on how to increase your credit score fast or within 30 days. I mean, I even did a video on this myself. And all of those videos out there revolve around the idea of decreasing your utilization to help improve your credit score. And your utilization breakdown is the amount of credit that you've used compared to your overall credit limit. And on an 850 point system, this would account for 255 points. So for example, if you had a balance of $500, but your total credit limit was $2,000, that means your utilization would be 25%. So you would receive 75% of your total points for that utilization, which would be just about 191 points. And remember, you want to pay your balances in full each and every month to avoid interest. And ideally, you want your utilization to be at 0%. But some people are going to tell you to let your credit balance report to the banks before paying off your balance to show some activity. And I've done both before, and I've seen no difference in having a 0% utilization rate or letting the banks report up to a 10% utilization rate before paying my bill to avoid interest. So I personally try to keep this as close to zero as possible. Then you'll also have some people to tell you to keep your utilization below 20% so it looks good in the bank's eyes, and I'm still going to tell you keep it as close to zero as possible. Now let's talk about your credit history, because your credit history accounts for 15% of your total credit score, which based on an 850 scoring system is about 128 points. And while this is smaller, you can't fix this one by paying more on a balance or anything like that. This one can only be improved by one thing, and that's time. The longer you have your cards, the higher the score will be, which is why it is so important to have no annual fee cards as part of your long-term strategy, because these are going to help you with the age of your credit. Because those annual fee cards that you're opening and closing will adjust that age of your credit. But those no fee cards protect you as you're working on extending your age with the cards you're holding on to. Next, let's take a look at your credit mix. And the credit mix only accounts for 10% of your total credit score, which is only 85 points when you're looking at an 850 point scoring system. And this is just as it sounds, which is the different types of credit do you have: auto loans, mortgage, credit cards, student loans, etc. The more types of credit you have here, the better your score is going to be. Now let's talk about how new credit affects your credit score. And now we get to the part that might be the most overvalued part of your credit score. Because when people say to you, you're going to wreck your credit score by opening all these credit cards, feel free to show them this video. because new credit accounts for only 10% of your total credit score. Only 10%. But you'd think by the way that some people talk about it, it would be worth 50%. And that only accounts for 85 points on an 850-point scoring system. So even if you're someone who is super active in opening cards and get 0 points here, you could still get a score of 765, which is fantastic. So the next time someone tells you that you're ruining your credit by opening cards, feel free to tell them that they're wrong. Now let's talk about how FICO 10 is going to impact your credit score. So the first thing to remember that while FICO 10 and 10T are rolling out this summer, that does not mean banks are going to be using it the second it rolls out. Because if I remember correctly, many places are still using FICO 8. But I do think there are some features that banks will like, and we could see banks move towards using the FICO 10 and 10T scoring system in 2021. Because one of the big things that FICO 10T does, it allows banks to look back at 2 years of how you manage your credit. And this would change from the current 1-month look back period, and this gives banks more data to look at your trends and patterns. And you know what? This makes sense to me, because banks want to read more than just one page of your book before deciding if that book is good enough to publish or not. So for example, if you're someone who's been playing that balance transfer game, this could be looked upon negatively by banks, since the patterns that you have could set off some alarms for them. Also, another part that will be looked upon more heavily is the use of personal loans. So if you're someone who's had credit card debt and used a personal loan to consolidate that debt, then racked up more credit card debt, this would be looked upon negatively as well, since your utilization would increase again and you'd also have this outstanding loan. But if you're someone who's just been going about your way, making payments on time, and properly managing your credit, I think there's really little to worry about here, and I can't imagine your score dropping a ton of points. And sure, we could see some changes in our scores, but I think for those of us who properly manage our credit, this is really going to be a non-issue. But if you're someone who's had missed payments over the last 2 years, taken out personal loans to consolidate debt, or even had poor trends that give the banks more to worry about, then you know what, you might not like these changes. And these people could see larger drops in their scores. And as we could see banks using this to trend your habits and other customers' habits, who knows what kind of new restrictions banks will put in place when it comes to credit cards. Now, understanding how your credit score is calculated is super important so you can make proper decisions on managing your credit. Even with FICO 10 looking to roll out soon, the basics on keeping your credit in good shape still stay the same. Just remember, keeping your utilization low and payment history high will have the most success in keeping your credit score high, because those two alone account for 65% of your total credit score. Also, being more aware of your patterns and making sure you aren't doing anything that the banks could question will be very important as well. So tell me, what do you think of the FICO 10 scoring model? Hey everyone, thanks for tuning in this video. If you want to help support the channel, a simple way would be using links on the website or in the description below. And if you know somebody who could benefit from this video, feel free to share it with them. And until next time, safe travels and take care.